How's it going? I'm Ryan. Today I'm going to go over the two trades I took on MNQ. First trade was a loss, second trade was a win. Just barely positive on the day, but nonetheless, that win made up for the loss and some. Um, we'll get into it, but before we do, let's take a look at what I was watching. We'll take a look just at MNQ on the hourly here. So, last Thursday and Friday kind of established this range. I had some levels drawn out as well that kind of played into this range. So we had kind of this support slash resistance from the past couple weeks projected forward, and then you see we're kind of trading within those levels. So coming into the day, we had what looks like this, to where we're in this range. You know, we have two kind of highs. Last Friday's high a day. We have some stuff in the after hours, pre-market low and pre-market high, represented by these yellow lines. Like I said, that last Friday's high by the green line, and then the blue levels are just higher time frame levels that we're watching. So kind of just in this range in here. It's coming into the day, really just wanted to either play the extents of the range, so like the bottom of the range looking to get long, or top of the range looking to get short. My first trade kind of broke that a little bit for me. Second trade followed that plan and made it back. So let's take a look at the two trades I took. So we have pre-market high up in here. We start the day, have a bit of a sell-off, and a very aggressive recovery, bounce right back into this area. Like I said, I'm kind of watching this range. I'm watching for rejections around like pre-market high slash Friday's high, or bounces around like pre-market low or this 19,500 area. But we start to range in here. And the first trade that I took was probably a little early. I probably should have given things a bit more time to play out. This is 10 minutes after they open. But I took a short right here. And the reason why I did is from the market open, we had kind of this rejection off of pre-market high, came down, tried to hold this area in here. This kind of, I don't have it as a level, but like this 19,595 or so. You see some price action from previous days in there as well. Getting some wicks in there, but failed to hold the EMA and failed to hold that level, and then sold off down. Then we had a bounce up into this area where we see declining volume, right? We see high volume on the bottom of the bounce, and then that volume declines as we climb back up. We tested that EMA in kind of that area that we were holding before, wicked down close below the EMA. We had another candle wick up and then push down, and after this point I entered a short position. I only entered 3 contracts. I did size down. Normal size would be about 5 contracts. I sized down because this is the middle of the range, right? And that's not where I want to trade. If we're in a rangy day, I don't want to trade the middle of the range. I want to trade the extents of it. And I thought maybe we would get some continuation because we didn't quite get down to like that pre-market low. I thought maybe we come up, reject, hit this area of liquidity that we were trying to hold earlier. It looked like we had some weakness in there. I was expecting a move back down, and I was going to kind of trim along the way, holding for a bigger move because I only had those 3 contracts. My stop loss was above these wicks up here. I think it was about a 15 or so point stop loss. This next candle, we just made a vertical move and stopped me out. So this is a bit tricky. Like I said, I could have avoided it by not playing the middle of the range, so that's on me. But I did like kind of with the price action in that area, rejecting off that EMA, rejecting off that area of previous support. So I'm not mad about it, and I did take a smaller size, which is good because it kept that loss very respectable, or just very manageable, I guess is the best way to put it. So yeah, didn't expect that much strength coming off of these 2 subsequent candles, or these 2 previous candles. That subsequent candle was pretty strong. We did get a little bit of a pullback, but from there we kind of chopped around, and I took my second trade. I took my second trade over here. So From there, we kind of chopped around, still playing within this range. I debated a long position in here as we were getting down and kind of holding around that pre-market low. I didn't, but I did consider it. It was a little risky, but I think that's the thing about these range days is that playing the tops and bottoms of them feels risky, but they're really the best reward or risk to reward situation, right? If you're taking shorts up in here, you see the level of the moves that come out of it, right? It's dropping 80, 60 points, 50 points easy. And likewise, when you see us come down here, we have rapid reversals where we're moving, 50, 60 points to the upside. So you could risk, 20 points or so entering at the top or bottom of these ranges, risking a breakout to either side, and then just look for that reversion, at least to the middle of the range or to the extent of the range. It feels, I guess, when you have a massive sell-off, it feels risky to buy calls when you're so weak like that, or it feels risky to buy puts when you've had a big run up in just a few minutes. So I think ranges kind of screw with my head a little bit more than a trend day. And trend day, you're just looking back, you're just looking for an ideal entry to enter, in the direction of the trend. Range days, you're trying to dictate, what the extent of that range is and playing it accordingly. It's tough. All right, so like I said, we kind of established range. We failed to break out of the pre-market range this whole time, and this is where I took my second and final trade. We pushed up here. We swept that high a day liquidity and got near that pre-market high. Once we started selling off, I entered 6 contracts. So I entered 3 somewhere in here, and then as we started selling off, I entered another 3. I was wanting a move back down to the bottom of the range. I did have a take profit. We'll talk about where my take profits were, where my stop loss was. I had a entry, I think of, was it 24, 23, something like that, 23, somewhere in here, I think. And stop loss was above the high a day. So it was about like no, it wasn't 23. It must have been about 20. And then stop loss above high a day. So about 14 point stop loss. My first target was right in here, and we just barely hit it before reversing, and that's about like that 595 area we'll call it. Reason being, just looking back on previous price action throughout the day, it's kind of this middle point where we had some bounces, some rejections, some bounces over here. So I just put it right in there. It was also close to the EMA, and it happened to be a nice what would that be? I guess I had a worse entry than I thought. A little below 620. It was about 20 points. It was a little over 20 points. I think it was like 24, 25. From my entry to that EMA, also coincided with some previous price action. So that's where I set my first price target. I took 3 off, so I had 6 total. I took half of my position off at this point. I was going to trim another 2 down here. And that's because we have, some price action in here as well, some wicks and some candle closes and opens in this area. That would have been another about like 15 points from my first trim. So I would have taken 2 off here and then just had 1 remaining runner, in which case I was going to try to see if we, got towards the bottom of this range down here, in which that would have been a really big winner. But let's look at what happened, right? We came down. It was looking good so far, although I will say the previous sell-offs happened pretty aggressively, right? You see how fast we're selling off from that area. And we got a pretty good 2 candles in a row, but then these 2, you see we kept trying to push up, closing lower, closing red, but showing that there was some upper wicks as opposed to these where it pretty much just dropped, right? You see it just dropping, not much of a push up on those. So to me, this looked like maybe the sellers in this area were exhausted. A range only lasts so long. And so once I took my profit, I set the remaining 3 to break a little above break even. My entry was somewhere in here. And so dropped my take profit about 5 or so points into profit just to protect myself with contract fees and everything. Essentially break even. We pushed up, stopped me out for break even, and then kind of rallied up and had a really big move to the upside after that. I missed all of this. I would have liked that pull back into like the top of this range, like this right here was nice. or potentially in here. Pulling back into that pre-market high was nice. But yeah, we got a massive run up in the second half of the day. Didn't capture any of that, unfortunately. But we're able to, with one trade, make back that loss and then some. End up positive on the day, $38. So that's all I got for you today. It was kind of tricky trading that range. We did get a breakout. It was in the latter half of the day, and that's kind of when I stopped trading. So yeah, that's all I got. I trade live Monday through Friday, so I'll be here this week, starting the days off on YouTube. Join if you feel inclined. We'd love to have you, and I hope you have a great rest of your day. Thanks for watching. Peace.